So under the previous standard, under what we did in the past in regard to lease accounting, you had to look at, or I should say, the obligation to make lease payments never appeared on your balance sheet as a liability. So you had many organisations that had lease contracts that they'd entered into. They had rental arrangements, whether it was for equipment or for an office space or something else, but that did not appear on the balance sheet as a liability. And so there was a level of concern that perhaps this wasn't giving a true reflection of the nature of an entity's financial position. We had one example, which was the Borders bookstore, which when that went bankrupt and collapsed, because they had so many retail leases, the liabilities they had to pay out as part of that was significantly higher than the liabilities that were actually showing on the balance sheet. So that came in, and then there was this question of saying, well, how can we look at this better? How can we make financial reporting more helpful, more informative for the users, and make sure that when people have entered into a contract, should that be showing as a liability? How might it be showing as a liability? So if we then look at the timeline of when did this come in? When did we start talking about the standard? So the actual AASB 16 standard was issued back in February of 2016. There was a period of time prior to that with the exposure draft and the discussion about what was going to happen. But then when the standard was issued, it was originally issued with an effective date to apply to financial years beginning on or after the 1st of January 2019. Now, I know with standards, they always talk about it's the financial years beginning on or after or ending on or after. And so to try and make it a little bit clearer, a little bit more make sense, then I've taken the example of either a December year end or a June year end. So if you were a June reporting year end, the first financial year beginning on or after 1 January 2019 would have been the year commencing on 1 July 2019 and ending in June 2020. So for most of our clients that are June year ends, the year ending June 2020 would have been the first year of applying the standard, and they would have then had a comparative period for the 18-19 year, potentially where they had to go back and also apply the standard for. Where we're now looking at the June 2023 year end coming up, we're almost now getting to the third full year of having applied this particular accounting standard. So then let's look at, so we've talked about when does it apply. Now let's look at who does this impact and what type of clients are we going to need to be thinking about this standard for? One way of looking at this is saying, well, actually, while this might seem new or a bit different, actually this AASB 16 approach, we could call it our new normal for how we treat lease accounting. And going through that sort of AASB 117 approach is almost the old or the out of date, the way of doing things. So it might be almost, I'd be looking at it as everyone should be doing this standard unless there's a reason not to, could be one way to think about it. I also saw quite a few people saying, well, I'm doing special purpose reports, so obviously this won't apply. I can completely ignore it because I just do special purpose reporting. But what you need to consider is, well, actually some of those entities doing special purpose reporting might still actually be reporting entities of some extent where they might have to apply the recognition and measurement principles. They might have to apply AASB 101, for instance. And even though it's a special purpose report, could still be caught up with having to implement AASB 16. And we've seen that especially in the not-for-profit space, with many of those smaller not-for-profits, especially once they get above the $500,000 revenue threshold, that this standard is then applicable to them as well. So what other types of entities is this going to apply to? So if we're preparing financial statements and we've said the financial statements are true and fair, if that's what's written in note 1, then we should be applying the standard, because true and fair is generally going to mean we've applied all of the accounting standards to calculate the numbers. If start that note 1 at the start of the financials says we're applying AASB 101, well, that's going to indicate we should be applying the recognition measurement principles. If we're doing general purpose accounts, obviously, And so that's going to apply to any of those entities if we're looking at QBCC clients, AFSL license holders, large proprietary limiteds, and so on. We've also got, if you have in note 1 saying that I've complied with Australian Accounting Standard, many of the not-for-profits, and also all of the Aboriginal corporations. So you can see there's actually a really broad number of types of entities that are now going to need to apply AASB 16 as part of their way that they approach accounting. So perhaps the only good news for today, lessor accounting basically doesn't change. So I'm not really going to spend any time talking about lessor accounting in today's session, because under the new and the old standard, there's not any real significant differences. But where we do see differences is for the lessee accounting. In a really, really simplified sense, you could say that under the old standard, everything that used to be treated as an operating lease now gets treated like a finance lease, and that operating and finance lease distinction ceases to exist. That's probably the simplest way I can describe what does AASB 16 mean. You're going to end up with higher assets and higher liabilities on the balance sheet, as well as changes in the way things appear on the income statement and changes on the cash flow statement. The cash flow might be the one that surprises you because we're only changing an accounting standard. We're not actually changing our cash payments, yet the cash flow statement will change.